Hello, and welcome to another episode of the Market Pulse series. My name is Rufas Kamau, Markets Analyst at FX Pesa. So today we have had quite a day. I would say there's quite a number of news announcements that have happened in the day, and they're basically defining the direction the markets are taking. And we will be discussing all those. We will be looking at the key price action levels and try to identify the trends, patterns, as well as potential market opportunities. So before I progress, I would like to begin with a mic test. So if you can hear me clearly, kindly type hi on the live comment section, and these will confirm that everything is working just fine. Hello, Victor. Thank you for your response and welcome to the session. Awesome. So let's get things started. We'll jump right into the economic calendar to see what happened. Hello, Meshak. Thank you for joining the session. So we've had quite a number of data points happening over the week. So I think the key highlight I would like to begin with was the major defining moment for the US dollar, which was basically the inflation report, which basically showed that inflation in the month of August increased 0.6%. And this was as expected, but a big jump from the previous reading of 0.2%. So core CPI, on the other hand, was expected to rise by 0.2%, but instead it increased higher to 0.3%. And the overall number for the CPI year over year rose to 3.7%. So when you look at these, you realize that this is the second consecutive time that we are seeing inflation on the rise in the US, and this is quite worrying. So we have had these consequent movements downwards for 12 consecutive months, and then in the last 2 months, inflation is now back on the rise. So one of the reasons this has been happening is because energy prices have been on the rise, and of course, the housing costs have also been contributing to the rise in the CPI in the US. So this happened yesterday, and then today we had quite a number of data points. So jobs data in Australia showed that there was a bigger than expected number of jobs created in the Australian economy, where we had 64.9 thousand jobs created in the month of August compared to the previous month of negative 1.4K jobs. Then fast forward to the interested decision. This happened at around 3:15 p.m. There was a surprise rate hike where overall we expected that the ECB would hold interest rates level at 4.25%, but instead it went for a 25 basis point hike, eventually pushing interest rates to 4.50%. So on the monetary policy statement, the ECB basically illustrated that they're not looking to do any more rate hikes. So this could be the top, and this explains why we were seeing an opposite reaction in the markets. So a higher interest rate basically implies that we should be seeing a stronger euro. However, the market reaction we saw is the euro losing to the dollar immediately after the announcement of the interest rate decision, mainly because investors are betting that this is the last rate hike in the Eurozone. And of course, judging by the market conditions in the Eurozone, we have seen a couple of economies continue experiencing higher inflation. And on the other hand, we have also seen major economies slowing down in terms of manufacturing production, with the biggest economy in the Eurozone, that is Germany, basically being in a technical recession. So then later on, we had US data coming in at 3:30 p.m. US data points were quite challenging. First data point we saw is a core producer price index, which came in as expected at 0.2%, which was slightly lower than the previous reading of 0.4%. Then we had core retail sales, which came in stronger than expected at 0.6%, compared to the previous reading of 0.7 and the expectation of 0.4. So the key market movers are these three: producer price index, retail sales, and unemployment claims. So producer price index, which is basically a measure of forward prices, basically jumped higher to 0.7%, higher than the previous reading, as well as the expectation of 0.4%. So higher producer price index basically implies that on the next reading of the CPI, we should be expecting to see higher prices. So whenever we see the PPI, we tend to think of forward prices, which may reflect on the next CPI reading. Then on retail sales, these are basically a measure of the consumer purchasing power. When people have more money, they buy more stuff. So when you track the receipts that are made in various retail chains, such as supermarkets, apparel stores, and so on, then you're able to gauge how much consumer confidence people have, as well as how much purchasing power they have. So these trends are quite informative, and by this data, basically jumping up 0.6% in the month of August, compared to 0.1% expectation and 0.5% in the previous month, basically shows that the American consumer is pretty healthy and optimistic about the near future of the economy. So a very strong American consumer is not consistent with what the Fed is looking to achieve. So the Fed is looking to slow down the economy, and you can't do that when people generally have more money and are buying more stuff. So when people have too much money and they are buying a lot of stuff, it basically tends to be inflationary for the economy, and that's not what the Fed is looking to achieve. The Fed is looking to drop inflation back to the 2% target. So this is a data point that was against the Fed's expectations. And of course, producer price index jumping higher, which basically implies high inflation on the next CPI reading, also is not consistent with what the Fed is looking to achieve. So when you get such data points, they basically pressure the Fed to go for another interest rate hike so that they can slow down the economy. Now, the last data point was the unemployment claims. This one came in at 220K. It's a weekly data point. So the expectation was that we would have 226. So the number was lower than expected. And the previous reading was 217K. So we are seeing a slight increase in the number of unemployment claims. And when you see the number of unemployment claims increasing, then this basically means that the job market conditions are softening. It basically implies that the demand for labor is reducing. And as a result of that, this tends to be consistent with what the Fed is looking to achieve. So as a total or a summary of the three data points, there are two very strong points supporting a strong dollar, supporting another rate hike, and one data point, which is weekly, supporting a weak dollar, which is basically the Fed holding interest rates steady. So as a result of these, there was an overall consensus that the market is looking at a potential rate hike, especially when you combine with what happened with the ECB, then there's a good chance that the Fed might go for another interest rate hike. So following this announcement, we had quite a number of reactions. So going back to the charts, you'll notice that the immediate reaction that we saw with the USD index was a big jump higher, meaning that the dollar literally strengthened against other currencies. And this has been the trend for the day, and we could be expecting that the dollar might continue strengthening through towards the end of the week, which is basically Friday tomorrow. So as for the Euro USD, what we saw is a big jump downwards as the ECB indicated that it might not go for another rate hike. And then after that, we saw a stronger dollar, basically accelerating this trend and pushing the Euro USD lower. So from the 4-hour chart, this is how it looks like. From the 1-hour chart, we can see the market basically broke out of this channel and kept going downwards. So there is a good chance that the Euro USD will continue weakening towards the end of the week. So as for USDN, we can see that the market opened with a gap downwards here at the beginning of the week, kept going down and then recovered. On Tuesday, continued recovering. Wednesday, crossed the gap and pulled back downwards. Then today, on Thursday, we opened with a small gap. Market went down, went up, closed the gap, and then pulled back downwards. And now, after the news, you can see the dollar is now reshaping and basically taking more strength against the yen. So as we approach the end of the week, perhaps we will be seeing the USD crossing this gap and moving even higher. So with all the factors basically uh, showing that the Fed might go for another interest rate hike, then as a very strong dollar might overrun the Japanese yen, and we could be seeing the price headed towards the previous high. So we have a very strong resistance point here. So if I was to highlight the area, then you can see the number of points the market was unable to break this area. So now that the market has bounced from this area, you can see the long lower tails indicating a rejection of lower prices. So in this case, a potential for the market moving towards this zone. Then on the pound USD side, we can see the strong dollar in play. So here we were expecting that the market was just moving sideways. So if I was to use this rectangle to just illustrate, you can see that for this period of time, the pound was just moving sideways. So we were waiting for this breakout to happen. So the market didn't quite get to the upper trend line here. So it was a straight up break towards the lower side. And now we are looking at a potential continuation in that direction. So it's just very close to the lower trend line. So we could be approaching support for this particular chart. So if you follow what has been happening in this chart, then there's a high likelihood that as the market continues pushing down lower, we could be approaching a support level where the pound could potentially be bouncing. But for now, with the strong dollar happening right now, then this might continue through the Asian session. So for USD CAD, you can see that the Canadian dollar has been pretty strong as a result of the strong correlation with the oil market. So whenever oil prices are rising, Canada being a major exporter of oil, tends to benefit. So we tend to see their currency strengthening in the same line with oil. So while the US dollar has been pretty strong and bullish against other currencies, for the Canadian dollar, it has been unable to bully that currency. So we are seeing this strong bearish momentum. However, it's important to notice that now, as we speak, it is testing a key level support, and this is around 1.34959. So this basically means that there's a good chance we could be seeing some buying opportunities around the support, and price could vary from this point onwards. So as for gold, we saw a pretty strong bounce. I remember talking about this in the morning. So we had a strong bearish momentum after the first 3 hours of the day, where the price of gold continued losing to the dollar. So it recovered a little bit and then continued moving further downwards up until it got into the yellow zone. So in the morning during the market snapshot series, we talked about this area being a potential support level. So we had this bottom marked here as the 1903.87 price level. And of course, the 1900 price level, which is a round number that tends to be very instrumental for gold. So from this point onwards, as the dollar was strengthening against gold, we found a pretty strong support, and immediately you can see the momentum that came into the market. So now we are back at the 1910 price level, and potentially we could be seeing the price of gold moving even further upwards, perhaps even retesting this breaking point. So this is the point at which gold broke this particular pattern, which was a channel. The price level is somewhere around 1917. So we could be seeing the price moving from this point all the way up to the 1917 price level. So it's a pretty strong bounce. And even if you go to the 4-hour chart and you look at this set of candlesticks, you'll notice it's a bearish momentum and then a very strong bullish candlestick. The shadow extends to the low, just as the previous candlestick, which is indicative of a very strong entry by buyers in this market. So in this case, I expect gold to at least make some recovery against the dollar, potentially towards the 1917 price level. So AUD/USD having broken out of this pattern on the 15 minutes chart, we saw some continuation here and then out of noise around this area. And I don't think we have much to talk about here. So it's a market that has been basically whipsawing. You can see the long upper and lower tails that have been happening throughout the day. But key thing to notice is that we are at the top of the pattern. So the top of the pattern is here. This is where the bearish channel started. once the market got to this place, there has been out of candlesticks attempting to break, and every one of them has failed to break higher. So as a result of that, we could be seeing the Australian dollar failing to break this level, which would create a potential opportunity for the market to go back downwards. So this is not confirmed yet. It's a wait and see kind of scenario. So you might have to observe the candlesticks and see whether there is evidence of a strong bearish entry. So as for US equity indices, it was a pretty bullish news for them. If you see a very strong retail sales report, it means that customers or citizens of the US have a lot of money in their pockets and they're spending. So if they're spending a lot, then it means that the companies in the US will be benefiting. So it tends to be positive news for the stock market. So for producer price index, basically moving higher, it's also positive for the stock market. So even though prices are moving higher, it means that the demand is still very much strong. So in this case, we had a very strong bullish momentum yesterday, and this has continued today after the news. And now we are approaching a key level, which has been acting as resistance for a while. And now it's time to consider whether there is a potential short selling opportunity. So in this case, I'll try and adjust my trend line to make sure you have the correct actual prices. Then I adjust this edge, and this is our right trend line. So right at the edge of this high, at the edge of this high, and now we are approaching the same level. So in this case, for the US NASDAQ 100 index, I will be expecting that once we have broken this high, we test this trend line, and if there is evidence of strong bearish entry, then it might make sense to look for short selling positions. However, if there's a clean break of this particular trend line and price moves higher, then in that case, we start considering bullish positions. But for now, it's highly likely that the market will find resistance here. And once that happens, then we consider short selling positions. So for the US 30 or the Dow Jones index, we had found this area to have a very strong resistance. So once the market got to this area yesterday, there was a sharp drop, but then today there was a clean break, which basically led to further price momentum. And now that we have broken 34,890, the new target now becomes 35,026, which was our previous high here. As for the US 500 or the S&P 500, what we are basically seeing is a market that was basically testing a resistance level here, judging by the two highs here. But then it made a clean break and then accelerated higher. And now to look at our potential target areas, I think the previous high is a pretty reasonable target as we approach the end of the week. So it seems like a very bullish week for the SP 500. So UK oil has been the most bullish asset for the last 3 months. So far, we saw a consolidation being broken here, where the market was literally trading sideways, then managed to make a breakout here, kept going up. So yesterday was more of a sideways momentum, but then today an acceleration higher. So from the analysis we did on Monday and projected that the market would eventually get to $93.416 per barrel, it seems like it played out as expected, and the market is almost hitting that target. So oil seems to be pretty bullish across board. So even if you're trading US oil, Brent oil, it seems to be reasonably high and bullish. So the last time we saw price at this level, this was all the way back in November last year. So we are basically looking at a 10-month high approaching the 11th month. So as a result of the Saudis and Russia cutting oil output, we are looking at a demand supply kind of scenario where supply is being cut and markets are recovering. So the demand of oil is rising, which is basically pushing prices higher. So with Brent touching $93, it basically means that oil is pretty expensive. And very soon we are going to start feeling this effect in our own pockets here in Kenya. But then also in the markets, we're expecting this to drive inflation higher across board, especially in the US as well as in the Eurozone. So as the Fed looks to meet on next week on 20th, there's a high likelihood that they will be considering the impact of these high oil prices, and potentially they might go for another interest rate hike in order to control the inflation. So European equity indices have been pretty bullish for the day. So they made quite a good run. So right from this morning, where we were projecting they could continue moving downwards. Then we had a clean break and they kept going up. So for the French 40 index, currently at 73.31. If you look at the 4-hour chart, there's still more room for upside momentum. So we may expect this to continue through towards the end of the week. And it's the same thing across board for the Euro 50 or the Euro Stocks 50 cash index. There's a very strong momentum currently happening, almost a vertical momentum in price. So nearest target is 43.04. And of course, for the UK 100, it basically hit our target of 76.89 after breaking this resistance that was holding for a couple of days. So from the 4-hour chart, this is how it looks like. So we are currently approaching a very important level that could be serving as our resistance area. And this could present a potential selling opportunity once we complete the swing. So if you observe the last swing, how the market got to this low, and then it went up, got back to the same low and found support, then it's reasonable to expect that this has been rejected twice, and now the market is getting back to the same area. So we could also be seeing some resistance happening here, which would present another short selling opportunity in this area. So Bitcoin managed to break above 26,500 for the first time in about 2 or 3 weeks. The last time we saw it was on the 31st of August. So being the 14th of September, I would say this is 2 complete weeks. So there seems to be some form of bullishness in line with what we have seen with the US equity indices. So there's a good likelihood that if the Nasdaq keeps going up, then we could be seeing some further upside momentum happening in Bitcoin. New Zealand USD seems to be stuck in this bearish momentum, haven't been able to form newer lows, but all the more it's also unable to form higher highs. So if we zoom out here from the daily chart, you can see that this price keeps on getting suppressed, and there's a high likelihood that the strong dollar will eventually retest the previous lows. So despite the high volatility and the long tails that we have seen today, it seems like this market was unable to break towards the lower side. And now we are seeing what seems like a consistent theme in an attempt to break downwards. So if you zoom to a smaller time frame, this is the 50 minutes chart. Then for the day, seems like we've had a couple of limits. So first limit along this area here, the other limit along this area here, and now it seems like we're on a downswing. The market could be getting back towards the lower trend line. So US oil, almost the same chart as the Brent oil. So still some further upside momentum. Then for USD trading against the Swiss franc, we have had one of the, I would say, most significant breakouts that we haven't had in a long time. So in this case, you can see it's a sideways momentum range that has lasted for quite a period. And this was basically broken today. So after the market traded within this range for the last 7 days, we eventually had a breakout towards the upper side, and now we expect some further upside momentum as the dollar continues strengthening against the Swiss franc. So this breakout is very important, and we could be seeing some further upside as we head into the end of the week. So hi, Kipro, Bet, and Kevin. Hello, Mukua, Charles, and Francis. What's trending? Hi, how are you doing? Triple M, glad to be back. Thank you. Any views on whether the euro will continue to fall despite increase in rate by 25 basis points? Yes, on one side, especially if you're trading euro USD, we have seen that the dollar has continued being strong, and now we are on the course to form another week where the dollar closes higher. This would make it the 9th week where the dollar is basically strengthening, and as a result of that, the euro might not be doing pretty well. So with the dollar strengthening and the euro weakening, perhaps if the euro was to recover, it would be perhaps against another currency. But for euro USD, I expect this momentum to continue. And this is based on the fundamentals as well as the technicals present in the charts. So from the daily chart, you can already see it's a very strong momentum approaching this base here, or the support at 1.06351. So it's also a clean break from a very long-term trend line that we have been observing here. So I remember drawing this trend line some time back. So first time we saw the first instance was in March. Second instance was on the 30th of May. And then since the Euro USD broke this particular trend line, all we have been seeing is signs of bearish momentum. So from the 4-hour chart, this is how it looks like. So this was a clean break, a retest, and the momentum downwards last week. Then we traded in this range before the market broke towards the lower side. So for the range, this is how it looks like. Some oscillation up and down, followed by a break today and a continuation downwards. So in this case, I expect the price to keep on going downwards. So that's it for the day. Thank you very much, guys. Thank you for your time, and I hope to see you on the next session. Remember, the market snapshot continues. So tomorrow it will be hosted by Samson Mzera at exactly 11 a.m. So remember to subscribe to the channel so that you can get notifications whenever there is a new session going on. Thank you, guys. See you then.